Luxury listings in Decatur are filling at a rate that quite frankly will shock you. Meanwhile, in Sandy Springs, it's seen nearly half of its sales volume year over year just vanish. And is Buckhead starting to lose its stranglehold on the Atlanta luxury market? As always, if you want to grab my luxury report, which will include everything in this video and more, you can check out that link in the description and in the first comment. All right, this is your August Atlanta luxury real estate market update coming up right now. All right, so we have a lot to cover in today's video. I'm going to start zoomed out and we're going to zoom in as we go. I'm going to talk about Buckhead a little bit later on in the video, but we're going to talk about the market as a whole to get started. And right now, 1 out of every 10 sales in Metro Atlanta is considered a luxury sale. It represents 10.5% of the market. So that's $1 million or more. And I know there are parts of Atlanta where $1 million really isn't considered luxury anymore, but in this video, it's $1 million or more. Now, 17% of all of these transactions involve cash, meaning that the rest have no financing, right? And in the luxury space, I think there's a preconceived notion that luxury buyers pay cash for everything, but that could be further from the truth. Only 23% of all luxury sales were cash deals, meaning that 77% involve financing. So with that said, let's take a look and see where the 30-year rates are. And the first thing that you're going to see when you take a look at this chart is that there's a difference between a jumbo loan and the conforming. So what's the difference? So the loan limit for conforming loans on a conventional is basically $806,000. That's not the price of the house. That's just the maximum that you can borrow to stay under the regular, call it conventional loan, right? So if you buy $1 million house, you can finance up to 806 in Atlanta for a single family home. The rest you have to put down, for example. Now, if you want to finance more, you start getting into that 1.5 to $3 million and you're going to get conventional financing. It's going to be a jumbo loan and you're going to pay a little bit of a premium on interest rates to get a jumbo. So what are we looking at? So you can see that rates have been trending down over the last couple of months, especially over the last couple of weeks. And with the Fed meeting in September, there are 3 more Fed meetings this year. So far this year, they've kept rates exactly the same. Now, the Fed fund rate doesn't necessarily force the mortgage rates to go down, but there is a correlation. It usually takes a little while after the Fed rate goes down to see mortgage rates go down. Mortgage rates, I've mentioned in other videos, it tends to follow the 10-year treasury, which follows the stock market and jobs and so forth a little bit closer. So nonetheless, if Jerome Powell and the Fed, if they choose to drop rates in September and they do it again, you could see rates further continue their downward momentum heading into 2026, which would be great because that will open up a bigger part of the market. You're starting to see some inventory tick up. We're going to take a look at that as well here in just a little bit. And you'll have more buyers coming back into the marketplace and more sellers who purchased their property over the last couple of years choosing to refinance. So taking a look at where sales are, this past month, we talked about sales records. There were 455 closed transactions in the month of June. That broke records basically for a single month. This month, we're now in line with where we were in the previous year. So let's take a look at where we are with prices. So as a whole, we're taking a look at a median price of 1.35. That's unchanged from the previous month. You can see that it's been at that price with some ebb and flowing for quite some time now, a couple of years, right? The average rate is down a little bit over the last couple of months. As you see here, we're at 1.607. Next, we're going to take a look at median pricing, which is pricing right at the middle of the market. Blue represents July of 2024, gold July of this year, and black is a 90-day trend line. So that's going to be 3 months before the other data points. So we can kind of see over the last 90 days where things have been trending. And of course, Buckhead has the highest median sales price at 1.69 million, and it increased over the last year. We're going to come back to that because I'm going to show you average prices here in just a moment. And Buckhead, while its median price is up year over year, its average price is actually down. Now, it's up pretty much everywhere. When you take a look, there are some areas like in town, for example, where it stayed relatively stable. Same thing when you look at Woodstock. But most other areas have seen appreciation in the median price year over year. Even Sandy Springs, which we're going to cover in more detail a little bit later in this video. So you can see everywhere, right? Now, where it's down, you take a look at Cumming and you take a look at Marietta, and the median price is down year over year. So let's jump into that average price and see what I mean with Buckhead. So it's down a little bit year over year. Now Cumming and Marietta, their median prices were down, but take a look at the average price. So here, the average price in Cumming is up. Take a look at Marietta. It's practically the same thing. So it's right at that same level year over year and trend line over the last 90 days. So that's interesting how the median, the middle of the market, can move either up or down. But when you take a look at the sum of the market with its outliers and you look at the average, it's something completely different. Any surprises? Let me know in the comments. Speaking of home values, if you happen to own your own home, wouldn't it be nice to be able to track that value in real time? Because let's face it, when you go to Zillow, Realtor.com, Redfin, you can get an idea of what your house is worth, but it's not really specific to your house. Now, the tool that I have absolutely is. Let me show you what this looks like. So I'm going to put the link to this in the description and in that first comment. If you want to check it out, that's completely up to you. You pop in your home address. Once you claim your property, it brings you to this dashboard. On the dashboard, you get not one, but 3 different scores, one from Quantarium, CoreLogic, and Atom. So it gives you an idea of what your property is worth there. Then in addition to that, if you want to be able to calculate your home equity, sometimes you're not doing this because you potentially want to sell. Maybe you're never going to sell. You're just waiting for the right opportunity to refinance, or you want to pull some money out to do a project at the house. This tool lets you keep track of that as well because it has mortgage rates. You can look at purchase rates versus refinance rates. Maybe you know when the right time is to be able to get a home equity line of credit, that kind of stuff. This tool will also show you what's happening around your property. So if your neighbor's property sells and you want to see what that sold for, you'll be able to do that. So if this is something that's interested to you, check that link out in the description and the first comment. So now let's take a look at sales volume, because at the beginning of the video, I mentioned that Sandy Springs lost nearly half of its total volume, but not according to this chart. So what the heck am I talking about? We'll take a look, right? So Sandy Springs is up. And what is this? So we're taking a look at the total number of sales for the month of July this year versus July last year. So July was good for Sandy Springs. Its sales volume was up considerably. It was down in Buckhead. It was up in Alpharetta. It's down quite a bit in Marietta, but there's an ebb and flow to this. It's normal because you'll have different listings coming to market, and depending on what people put under contract and close, these will vary wildly from month to month and from year to year. So what we're going to do is look at the total volume for the whole year, and that's where the data tells a different story. So take a look at this. So the first thing to know about these data points is that they're 12 months worth of data. So for July, we're taking a look at August of last year to July of this year. So it's the same thing in 24 and 23. So it's not full calendar years. It starts in August of the previous year through those next 12 months. And this is what I'm talking about. So you can see here that everything is up across the board except Sandy Springs. So in Sandy Springs, over the last 2 years, it was basically the same amount of sales volume. And then this year, it's nearly half. It's a 46% drop. Meanwhile, everywhere else, it's up, up, up. Now, this is something that at first glance could seem a little confusing because the only other place where it's down year over year is in Suwannee. So there must be something really bad happening in Sandy Springs. Well, let's take a look at that. Let's dive a little bit deeper. So when you zoom in, there must be something terribly wrong with Sandy Springs, right? Because 2 years ago, it was $275 million worth of volume. Last year, it was 271. So something catastrophic must have happened for it to drop to 143. Well, let's look at the specifics and we'll see what's happening here. So the first one that we're going to look at is overall showing activity. So are people looking at houses in Sandy Springs? Well, the data says yes. It's actually, there are more people looking at houses in Sandy Springs this year than there were last year. When you take a look at the overall metro for the $1 million plus market, there are a lot more people looking at properties this year than there were last year. It's up in Buckhead. It's up in Decatur by quite a bit, actually. Proportionally speaking, you take a look at Cumming, Marietta, specifically in East Cobb, places like Woodstock and Canton out in Cherokee. And then you have other areas where you're seeing a pullback. So most people are looking, and this is going to be relevant a little bit later on in the video when I talk about Buckhead, but take a look at the amount of people looking at houses out in Alpharetta. So there are more people looking in Alpharetta than anywhere else right now, but it's down year over year. Other places that showings are down quite a bit, you've got Johns Creek, you've got Roswell, Duluth, Suwannee. Brookhaven's down just a little bit. So is this necessarily a case of just people choosing not to look at properties there? Or is it an inventory issue where there aren't enough active properties, so there aren't enough houses to look at? All right, so we'll be looking at that a little bit more closely here in a bit, because Johns Creek, this next slide, I think illustrates that point very well. So this is the number of showings per listing. And in Johns Creek, you almost have 8 showings per listing. So every listing that's on the market gets on average 8 showings in that $1 million plus price range. Well, the average for Metro Atlanta is just a little bit over 3. It's like 3.1. So Johns Creek is well above that, but overall showings were down. It's because there's not enough houses on the market in Johns Creek. We covered that last month. Johns Creek, the $1 million plus market, their homes are flying off the shelf basically, and they're selling for closer to asking, and there's more multiple offer scenarios in that space. So the baseline is 3.1. That's what this red line is. Well, listings in Sandy Springs are above that baseline, and there's been an increase year over year. So that's not what the problem is. So what else could it be? Well, not as many listings coming to market as this time last year. Now, that's not a huge drop off, but it's still a drop off. Overall, for Metro Atlanta, you can see here that there's a slight uptick year over year. And over the last 90 days, of course, there's going to be a sharp decline in the amount of new listings coming to market because spring market, right? It's always like that in spring market. So we're taking a look at the seasonality of it when you take a look at it this way. But with that said, there are still some markets where there are a lot more new listings this year than there were last year. Take a look at Alpharetta and take a look at Milton, for example. Those are big increases. Meanwhile, you take a look at places like Roswell, Ackworth, Canton, and Duluth, and there are fewer listings coming to market this year than last year. So taking a look at active listings, and you can see here that Sandy Springs has less on the market this year than they had last year. Now, the area with the most active listings over $1 million, of course, can be found in Buckhead. So year over year, it's about the same. And where we've seen a nice increase year over year, we'll look at Alpharetta. Look at the big increase here in Cumming. Take a look at Marietta. Those are sharp increases in inventory in those two different cities. As a matter of fact, with the exception of the couple of fewer listings in Buckhead, Sandy Springs is the only city on this list that has less listings on the market this year than last year. So if there are less listings for sale, maybe that has to do with the sales volume being down so much. And here's where those $1 million listings are concentrated by zip code. So anything that's in red here is a zip code with $1 million plus listings. So you take a look at Alpharetta, 30004, it's got 170 active listings in that specific zip code. Now that's more than anywhere else in the metro, including Buckhead, because Buckhead, first of all, is not a city. And when you take a look at Buckhead, it has multiple zip codes, and they're kind of spread out in 30305, 30327, and a couple of the other adjoining zip codes. So these are active listings. I'm going to show you here how that transforms when you look at pending. So these are pendings. So you can see it's almost the same thing in terms of velocity. You'll see more of those properties going under contract in 30004. You also have more listings there. So of course you're going to have quite a bit go under contract. So in a bit, we'll take a look at cities and pending ratios and all that kind of stuff. Roswell, pretty good. And here in town, 30305, it's a Buckhead. So deep red here in Alpharetta. So looking at those pendings, this basically just shows us pending distribution year over year, right? So Atlanta as a whole down year over year. Again, the black line is the 90-day trend. So pendings will be down because of the cyclical nature of our market, and spring market is always quite a bit higher. If you take a look at Sandy Springs, pendings are up year over year. So what this tells me is that if you're thinking of selling a home in Sandy Springs, it should be a pretty exciting thing right now, because all of the underlying metrics that support a good, healthy market are really good for Sandy Springs, with the exception of having enough inventory. So for a seller, that's really great news. You go to market, you'll probably get a lot of attention. Shifting into closed units is interesting, because when you take a look at Sandy Springs, again, we're up. So again, this is July over July. It's not the cumulative sales over the whole year, but that's up in the month of July. It's also up in Alpharetta. It's down in a lot of other areas. And as a whole for the Metro Atlanta region, for $1 million plus properties, it's down. Next, let's take a look at median days on market. So how long is it taking at the middle of the market to attract the buyer. So for Atlanta, we're taking a look at 22 days. Last year was down, so it's up. For Sandy Springs, it's 19 days. So for one, it's underneath what the median is. And for two, it's under what it was last year. Last year it was 21, this year it's 19. So it's basically homes are staying on the market a little bit less. It's because there's not enough property. See how it all kind of fits together basically, all right? Now there are areas where, gosh, median days on market are through the roof in terms of change. So take a look at Milton, for example. This was 17, this is 35. That is over a 100% increase in the amount of days on market. You take a look at Cumming, this was 10, and now it's at 30. That's a 200% increase. Now there are other areas where there have been increases. You take a look at Swanee, you take a look at Duluth, Canton, Ackworth. East Cobb is interesting because you take a look at Marietta as a whole, it's down, but East Cobb is up. So that area around the square and parts of West Cobb that are still zone Marietta, for instance, they're faring better than some areas over in East Cobb. Buckhead's down slightly. So it's just interesting. Now shifting from median to average, and it's going to tell a slightly different story in some areas. So we're going from 22 days on market median to 60 days average, right? So that's up year over year. Now take a look at Ackworth. Ackworth is at 100 days. I mean, it's down from last year negligibly, right? But 100 days. So if you were to look at Governor's Town Club, which is what is predominantly driving this, right? There's some other areas, of course, but predominantly Governors. You look at the amount of active listings in there right now. There's a ton. So I would like to think that people would be a little bit more negotiable in Governor's Town Club right now, because otherwise they're going to stay on market for quite some time. Woodstock as well has seen a decline, but it's still quite a bit higher than what the average is. So is Buckhead, but it's been on a downward trend. Now we're transitioning into months of supply, and this is how we know how healthy a market is and what kind of offers you should be banking. And it kind of piggybacks on days on market with median and average, but is it any surprise that Ackworth is up here? So this nice shaded line that I have here is a balanced market. That's 5 to 6 months of inventory. There's no real advantage to one party or the other. It tends to be a little bit more fair in negotiating. Anything under this is a seller's market. Hello, Johns Creek. And anything above this is a buyer's market. Look at Ackworth, right? So in a buyer's market, you can, like as I mentioned, afford to be much more aggressive with your offers, come in lower, ask for more things. In a seller's market, like over here in Johns Creek, if you try that, you're going to get laughed at Johns Creek. And right now, sellers are getting very close to their asking price. There are many properties going above asking, and it's a very, very hot market. So is Decatur. Decatur is interesting because some months it does really, really well, and other months you're like, why is this even here? You know, but months of supply is really low. It's 3 months of supply for Decatur. It's 2.7 right here for Johns Creek. And you take a look at Ackworth, that's 10 months of inventory. So other areas that have crossed over into buyer's market territory, take a look at Woodstock and Canton. So that's interesting. Now, year over year, they're down a little bit from what their positions were, but they're still buyer markets. And then where it's trending the other way is right over here in Cumming. So last year, it wasn't even a balanced market. This year, it's crossed over. And now that, my friends, is the start of a buyer's market. All right, remember at the beginning of the video, I mentioned that the rate of luxury listings failing in Decatur would shock you. We're gonna take a look at that right now. So I'm gonna show you two different ratios. Your eye's gonna gravitate towards these gold bars. That's the failure ratio. After we'll cover pending. Take a look at this, 81% for Decatur. That is not a typo. 8.1 out of 10 of all listings that come to market over $1 million in Decatur right now are failing. So what's a failed listing? We're talking about expireds and withdrawns. So expireds go through their contract period, nobody buys them, and then the contracts expire, they expire off of the market. Can an agent renew those? Absolutely. Withdrawns, you've been on the market for a little bit too long, you decide that you no longer want to sell, you let your agent know, hey, pull me off the market. Or your agent wants to reset the timer. Failure rate is the combination of expireds and withdrawns, and 8 out of 10 listings in Decatur that go to market over $1 million are currently failing. That is huge. So people just aren't rushing to buy $1 million plus houses in Decatur right now. So that's why that's so much higher than anywhere else in the metro. Now, also on the radar, look at Duluth and look at Canton. So that's interesting for Decatur, right? Because on the previous slide, when we were looking at months of inventory, how many months of inventory were there for Decatur? 3. Anything under 5 is a seller's market. 3 is a very healthy seller's market. Yet you go from 3 to 81% of its listings failing, and that's kind of a huge disconnect, don't you think? So I think that over the next couple of months, when you take a look at Decatur, this will obviously be trending upwards, because if this many listings are failing now, it's a lead indicator for what's going to happen to months of supply in the future. So 81% there is fascinating. Next, let's take a look at the pending ratio, which is a different perspective into the health of a given area. What is the pending ratio? You take the properties that are under contract, those that are pending, and you divide them by the number of active properties. And that gives you a ratio, gives you an idea of how long it's going to take to sell properties in a given area, which is not dissimilar to months of supply. It's basically the absorption rate. So buyers want the pending ratio to be as low as possible. Sellers want it to be as high as possible. So what's the difference, and what does that all mean? So take Ackworth, for example. Ackworth has the pending ratio of 8%, meaning that for every 100 properties that are currently on the market, only 8 of them are likely to go under contract. So in other words, it's roughly 12 to 13, right? So for every 12 to 13 properties on the market, one of them is going to go under contract. So if you're competing with 12 other listings and there's really only one that's going to go under contract, you better be darn sure that you're providing the best value to the marketplace, either in price or what the features of the property, condition, all that kind of stuff, in order to outcompete against your competition. Otherwise, buyers are going to weigh the pros and cons and select somebody else. Now, as a seller, when this is really high, it means that a lot of properties are going under contract. And there was a time a couple of years ago where this was 60, 70, 80%, sometimes over 100%. You'd have 3 properties come to market, but 10 of them are already under contract. Strong seller's markets. So obviously a seller wants it that way because they're going to get either closer or above their asking price. They're not going to have to do as much on repair contingencies and negotiating and concessions and all that kind of stuff. So the pending ratio for Atlanta is 15%. So 1 out of 8-ish properties, will go under contract right now. So that's significant. Right now, it means that the market as a whole in this space, the $1 million plus, is offering some unique advantages to buyers. So let's take those failures a little bit further along, and we'll take a look at the exact areas where they're happening. Now, when you're looking at this, don't really compare the size of the different lines, because every market has its own number of typical transactions, right? Like there's a lot more listings and activity happening in a place like Buckhead and Alpharetta than in, say, Decatur or a place like, Woodstock or Canton, for example. So less transactions. So instead, focus on, for example, the blue line, which is last year, compared to the gold line this year, to see what that ratio is, to see how a certain area is doing year over year. And in a place like Decatur, we saw the failure rate. You could also see here that the number of failures, they're right at 17. That's right at the average for Atlanta. But for Decatur, it's a huge jump, because this time last year, there were only 2 failed listings in the month of July. So if there are all these opportunities for buyers, it begs the question, what kind of deals are they actually getting right now? So we'll take a look at price cuts. So I've got this specific slide broken down by county. The black line basically represents how many active listings in that area have had a price cut or more, price reduction or more. And if they had a price reduction, what is the average price reduction that they've had? Meaning, when you take a look at this, you're going to see that in Atlanta, the greater Atlanta area, which is 11 counties, 39%, roughly 4 out of 5 houses that are over $1 million have had a price reduction. The average price reduction those homes have had, 6.8%. But when you take a look at these specific counties, which is where most of the luxury listings are located, you're taking a look at 3.2, 2.7, 2.2 out in DeKalb, 3%, 2.5, and 2.6, right? So that doesn't add up to the 6.8. So what this tells us is that outside of these 5 counties, you take a look at the other 6 counties that make up the greater Atlanta area, those listings have a higher rate of price reductions in terms of average price reduction than obviously these counties do in order to get to that 6.8%. So these are counties. You want to get more specific, we should look at zip codes. Luckily, I have a heat map that does just that. So on this heat map, I'm not showing every single county. I'm highlighting the highest price cuts by zip. That's what it is. I'm focusing on some areas outside the perimeter, and then we've got a sample set inside. So let's start on the north side. You'll take a look here, ball ground, 13.5%. So east side, 30045, that's east of Lawrenceville, 17.5%, 14.1%. Wow. So over here, 13%, 30236 is Jonesboro. Right over here is Lake Spivey. Somebody in one of my other videos was talking about how Lake Spivey should have been included on the areas where the wealthiest residents in Georgia live. Well, they also have some of the biggest price drops right now at 13%. East of there, or west rather, you've got, this is Fairburn, parts of Douglasville. I mean, this is technically Atlanta. It's Chattahoochee Hills, that area, 30331, 15.9%. When you focus in town, these are the zips with the highest price reductions. So 30317, 15.6, and then it drops significantly. You go over here to Vinings, it's 10.6, 30339, and then Buckhead, Sandy Springs, 7.5, 6.8, 7. It's quite a bit less than what's happening with the highest ones outside. So what that tells me, and when you take a look at this, this is where luxury is concentrated in Metro Atlanta. Now, that Alpharetta corridor as well is another very big corridor for luxury in Metro Atlanta, no question. But it's the perimeter places. When we take a look at this chart here and you see what this 6.8% is, it's those perimeter counties that are not necessarily known for $1 million prices that are having to have the biggest price reductions to attract people to buy those $1 million houses further out. That's what's driving this 6.8%. So this right here shows us what the discounts are on active listings, but what did sellers actually get? For that, we'll have to take a look at a chart that shows the sales price over the original ask price. And there's some really interesting things that jump out right away. So taking a look at this, right? You take a look at these two areas. You've got East Cobb and, of all places, you've got Decatur. So this time last year in Decatur, listings were averaging 100.8% of the ask price, aka they were selling for above asking. This year, 81% of them are failing when they come to market. Like, it's so crazy how in a very short period of time things can change, but that's what's happened. So when you take a look at the metro as a whole, in most places, as a matter of fact, everywhere, you don't get 100% of asking anywhere. Does that mean that there aren't outliers, there aren't exceptions where a listing will come to market and sell for exactly its asking price or more? That still happens. I've got a chart that I'll show you here in a moment where you'll see that it's still happening, but for a much smaller percentage of listings, comparatively speaking, year over year. But you can see overall for the metro as a whole that everyone's selling at a discount for the most part, right? You've got some areas where it's very, very high. So again, talked about Ackworth. We'll look at that. If you're interested in Governor's Town Club, you're going to get a deal on a property. Properties there are selling for 92% of the asking price. So on average, they're selling for an 8% discount. So ultimately, I think that all this just says that sellers have been pricing their properties too high. They're testing the market. They're still thinking that it's 2021, 2022, and that they're going to sell their house in minutes for, multiple offers with people lined out the door. But that's not actual reality. Is it happening in some parts of town? Yeah, it's happening in some parts of town. Right now, one of the strongest markets continues to be Johns Creek. You take a look at it in terms of seller's market. This year, you take a look at the amount of inventory, what stuff's selling for. It's selling for an average of slightly over 98% of ask. So it's just interesting. I think that, This is what buyers have been hoping for the last couple of years. We're heading into that market and you're getting more opportunities now than you were previously. And I don't see that changing over the next couple of years. So when you see here how it breaks down, this is the percentage of sellers who got their price last year versus this year. So let's take a look. So the black is basically the percentage of listings that sold for under ask. So last year it was 57%. This year it's 67%. That's a big jump up. That's 2 out of every 3 homes are selling for under the asking price. When you look at properties going for above asking price, that's dropped from almost 1 out of 4 down to 1 out of 6.5, right? 15%. That's a lot less that are getting their multiple offers and above asking, but it's not an insignificant number. 15% of all sales is still a very high number. So if you come to market and you don't overprice your house, you find the right price, you've done what you needed to button up the little things on the property, it looks immaculate, and you've got great marketing to help get the word out and maximize exposure, chances are you're going to sell for above asking, and 15% of the properties still sell that way. Ask 20% last year, 18% this year. It's roughly the same thing. So now it's time to talk about Buckhead. Now, at the beginning of the video, I mentioned that Buckhead might be losing its stranglehold on the Atlanta luxury market. And truth be told, they've been losing their stranglehold on the market for the last couple of years. And this is a chart that perfectly illustrates that. The next couple charts will. So here's what I'm talking about. So I think it's interesting to see because it shows how Atlanta as a whole is becoming more diverse with luxury offerings. So for the longest time, all of that was concentrated predominantly in Buckhead. You go back to 2012, for example, and in 2012, it was almost, and you'll see here in the next couple of charts, half of the market, half of all luxury sales were in Buckhead, basically. Now, when you take a look at this and you see where we are today, that's a big gap that's opened up. And this gap is every other city out there that started building $1 million+ houses. So Buckhead, over the last 12 years, has remained pretty consistent. Whereas the rest of Atlanta, well, that market's opened up. So let's break it down. So on this specific chart, you can see that Buckhead at its peak in 2015 controlled roughly half of the market. It was 47.1%, yet today it controls 18.9%. So when I'm talking about the Buckhead dominance score, it's because Buckhead's been the dominant player in the luxury space for the longest time. And over the last 13 years, 10 specifically on this chart, you take a look and you see, well, the rest of this gap here has been eaten up by other cities, other areas. Can you guess what one of those other areas might be? Well, if you were to guess Alpharetta Milton, on this chart here, I'm calling it the Alpha Milton corridor, you would be absolutely correct. And so we went from having 6% market share back in January of 2015 to having 16% now. So that doesn't eat up the whole area. You've got a bunch of other areas outside of Buckhead and Alpharetta and Milton that have eaten up and built $1 million+ houses. But this is another corridor that's become quite dominant. And we saw earlier in the video when we were looking at the number of showings and listings and where all of that activity is concentrated, it's predominantly concentrated outside of Buckhead in the Alpharetta Milton corridor. So where else might some of this distribution be concentrated? Well, here are a couple of areas. So for instance, Marietta in 2015 had 4% of the market. Today it's got 7.1. So a lot of that is concentrated, of course, in East Cobb, and or the historic Marietta Square. There are a lot of properties in the historic district that are now well over $1 million, some in the West Cobb area. In town, 11.2, that's been pretty consistent. 11.2 to 11.8, that's not a dominant share of the market. So you can kind of see how the rest of the market has gone from 30% up to 43.6%. So these are all the different offerings on the outskirts that I was talking about just a couple slides ago. But when it comes to dollar per square foot, Buckhead is still king. They now average $483 a square foot. So that is more and more trending towards that $500 a square foot ceiling. I think we'll get there over the course of this next year. Now, this next chart is another one that I like to look at to understand what's happening in the marketplace. And we looked at the pending ratio, which was the ratio of pendings to actives, but this is the ratio of actives to closings. And when you have a property that's in the market and one that corresponds with it that closes, it's a very tight market. And we had that market back in 2021 in the overall market. If you've watched my other stats video, you'll see here that this line here and this line here back in 2021 practically touched, but there was always a gap in the luxury market. It's just that that gap today continues to get bigger and bigger and bigger. So inventory trends up. Closings, this was a record here, 455 closings in the month of June, record month, but it's down to 366. You have that seasonality of it. Inventory continues to trend up, but now this gap is up to 5.7 to 1. The regular market is 5.6 to 1. So back when the market had crashed during the last financial crisis, you're talking about 2008, 9, 10, 11, 12, you saw a spread of anywhere from 12 to 15 to 1. So are we headed back to that level of inventory? I mean, I remember driving down Interstate 75 and seeing that billboard. I think it was a Better Homes and Garden billboard that said that in the entire metro FMLS, there were 118,000 properties, right? That's a lot. We're not there. We're on the luxury side, there's almost 2,100 properties for sale. On the overall market side, we're at 22 going on 23,000 properties for sale. So there's a lot more now than there were just a couple of years ago. You take a look at this back in 2022 and you started the year at 600 total properties, and now there's 4 to 5 times more than what there were at that point. We're not anywhere close to where that financial collapse happened and took down the housing market. That's not the case here yet. Who knows where it goes in the future, but we're not near a point where it's going to crash at the moment. So can we predict where things are going to go over the next couple of months? And this is a chart that will give us an idea, and I'll show you how it builds on that. So this is pendings to closings. So we've looked at actives to closings. We've looked at pendings to actives. And there's obviously a lead factor when you look at pendings to closings, because when something goes under contract, it needs time to close. You go through that 30 to 60 day window, you do your inspections, appraisal, all that kind of stuff. Not every property that goes under contract closes. Some come back to market because of appraisal or contract issues, sometimes buyer default. Like there's a lot of different reasons. Nonetheless, when you see something go under contract with this gold line, it's going to take 30 to 60 days to see that reflected on the close side because it takes time to close. And then once the pending start to come down, then you'll start to see the closing start to come down as well. So interestingly enough, let's take a look at how this builds on the future when we take a look at what happened in the past. So the red and green lines, the red are the pendings and green's closings for 2024. So we're here. This is the snapshot of time. We're actually in August now, but for July, this is where this was. And for August, September, October, you can kind of see where pendings went last year. They kind of zigzagged. And then, of course, closings followed suit. So if we use this as an indicator, and you see here that, let's say, pendings continue to do this thing, well, it's not unreasonable to think that closings might do something like this over the next couple of months. So if that happens, you'll have quite a bit less closings. And I think that that's kind of where things are going. You're going to have inventory continue to rise, especially as we factor in the seasonality of it, and you're going to have closings trending down. So ultimately, what does that mean? It means that if you're a seller, you better price right. If it's a buyer, it means you should start licking your chops because you have the possibility of getting better deals on properties in the luxury space. Of course, depends on what part of town. So let's take a look at how the market is distributed. And we'll do that in these different buckets. So $1 million increments, you'll see that 1 to 2 million is where the lion's share of the market is located. Now, when you take a look at this, listings are up year over year. Sales in this bracket are up year over year. So that last data set was monthly. If you want to take a look and see what the rolling 12 data looks like, it'll give us a good idea of what's actually happening year over year instead of month over year. Then take a look at this, because this here will show us that things are up quite a bit this year in every single bucket. Every single one, except for the $5 million plus bucket. So what does this all mean for buyers and sellers? Well, if you're a buyer, you now have some interesting opportunities that we didn't have just a couple years ago. You can afford to make more ambitious offers. Sellers may a couple of years ago had said, hey, we're not even going to respond to this. Today, they're going to respond to your offers with counter offers. Doesn't necessarily mean that they're going to accept a lowball offer, but you can definitely start lower than where you had in previous years. So that's exciting. Now, of course, it depends on what side of town. If you're thinking of doing that to properties in Johns Creek, or as we saw in this video in Sandy Springs, well, those are areas that are ripe for sellers. So if you have a property that's not yet on the market in Johns Creek or Sandy Springs and you want to bring it to market, you'll probably be very happy with the outcome. Now, if you want access to the report that I put together for this month, check that description and first comment. It includes all the slides that were in this video as well as some that didn't make it. If you're going to watch more videos today, this is the overall Atlanta housing market video for all of Metro Atlanta for the month of August. And if you're curious where the ultra wealthy choose to live in Georgia, don't miss this video here. Thank you so much for watching. Hope to see you on the next one.